To the United States of America. It continues to struggle with a worsening inflation. Yet the bigger story and bigger worry is not inflation, but the distinct possibility of a recession. The White House is sticking to its message. They say that the warnings of a recession underestimate the resilience of U.S. economy. Joe Biden's Treasury Secretary Janet Yellen has backed the president's position that a recession is not inevitable.
It's President Biden's top priority to bring it down. And Chair Powell has said that his goal is to bring inflation down while maintaining a strong labor market. That's going to take skill and luck, but I believe it's possible. I don't think a recession is inevitable.
Last week, the U.S. Central Bank took an aggressive action to address skyrocketing prices. The federal government launched its biggest interest rate hike in nearly 3 decades. While this action may have aimed to reassure the public, economic analysts are concerned of a looming recession. And as the cliche goes, whenever America sneezes, the world catches a cold. One cannot simply escape a downturn in the world's largest economy. Before we tell you how the U.S. recession affects us, let's first understand what is a recession. The economic experts declare a recession when a country experiences a fall in GDP for 2 or more successive quarters. Economy struggles, people lose work, companies make fewer sales, and a country's overall economic output declines. It lasts for months or even years. What causes recession? Well, this phenomena are some of the main drivers of a recession. Sudden economic shock. An economic shock is a surprise problem that creates serious financial damage. When large number of individuals are unable to pay their bills and growing number of companies declare bankruptcies, sometimes investors become too optimistic during a strong economy and spike the prices of stocks or assets exponentially. Eventually, bubble pops and markets crash. When there is too much inflation, banks raise interest rates. And this is what we call unchecked inflation. Now, higher interest rates depress economic activity, while in deflation, people and businesses stop spending and economic activity stops. Lastly, technological changes or challenges. While new inventions helps a country, the short-term adjustments can spark recessions and hard times. So how does the U.S. recession affect us? The United States accounts for 30% of the global GDP. If the U.S. economy contracts more than anticipated, the economic growth of the entire world will shrink. The global stock markets will reflect on the misery of American economy. And despite domestic demand and diversification of trade, the global trading market will take a hit. There will be volatility in foreign exchange rates, and the risk of a synchronized global downturn will increase. But a recession could bring down the oil prices. WION is now available in your country. Download the app now and get all the news on the move.